Hello, everyone, and welcome back to the J22 report. I'm your host, Johnny Market. You all know that drill. Hit that like button and subscribe if you already haven't. Just want to do a little disclaimer. Nothing in this video or past videos and future videos should be construed as investment advice. Just my opinions and thoughts on the market. Consult a financial professional if you want to invest. So anyway, let's get into today's big thing. I'm not going to do the economic data today. I will do that over the weekend, and we'll go into it then. But let's get into the markets. The big news is the Fed, and before we get into that, just want to do an update on gold and year to date, the S&P, and as you can see, the S&P 500 18.8% this year to date. Dow Jones 9.17. So we have that. But GLD, that's up 21.65. So gold is outperforming the S&P. And despite the stock market going up, and that's why you see, let's do the GDX just alone. Or is it year to date? 28% GDX. That's why you see the miners doing well. In my opinion, one of the reasons is even though the stock market, now I think if we do get a market crash, the miners, well, they'll initially sell off like gold and everything if it's like a market crash because of force majeure. But I think the miners will really outperform. And then GDXJ, which I don't really consider juniors, but they are smaller. Let's see, year to date, that's up 28.4%. So you can see the miners are doing well. I think that's going to eventually, as the miners do well, and some of these small juniors are doing okay. Some of them are doing great. Some of them are not doing pouring. I do think they're going to start buying up smaller companies because it'll just be cheaper and more efficient, even though they'll have to spend money to bring them into production to do so. And if you look at gold today, big day, it's out. They're out as it's outperforming, and it's up to it's closing above 2,500, and it's making to look a move, and so yeah, it's looking pretty good. And in terms of the stock market's still going up. As you can see, gold and the gold miners though are outperforming. This is a new era. They will. Gold and gold miners will start outperforming the stock market. But if you look at this anyway, let's go into the news. And one of the reasons they're outperforming also is the economic data, forcing the Fed to do this. Look at this dovish Fed. Let's look at the opens the door for a 50-point basis rate cut. This is Standard Charter. This was yesterday. So you look at it now. The question isn't is the Fed going to cut? Is how much? It's how much are they going to cut? I think that eventually they're going to go back down a lot more. Uh, so dovish that they opened the door to a 50-point basis cut. If not at September 18th, not at the 18th September meeting, soon afterwards. Very strong emphasis on activity downside, softening labor market, disinflation, and whatnot. So, but as you can see, they're no longer hiding or trying to look tough. Uh, they're going to Fed. If you've been following this channel, you knew they were going to reverse. You knew the economic data was going to look worse. Not as soon as I thought, but look at this next one. KC Fed President Schmidt says payroll revision didn't change mind on policy. Yeah, of course they were going to cut anyway. So they need an excuse. They got one, and the data was just horrendously bad. So the large 818,000 downward revision of non-farm payrolls year ended in March didn't change how they see the labor market. So yeah, they were going to cut. They sort of know they're in recession. This is probably why they were talking about cut, but still needs more data before deciding to cut the Fed fund rates for the target range. Yeah, right. They still need, yeah, they'll get plenty more bad data. Rates are restrictive, but not overly restrictive. So there you go. Just more things. And the other thing is, one of the things here it is. Banks, I wanted to talk about. Banks obtained crucial job data while the report was delayed. Of course, you know what this is called. This is called insider trading. So at least three banks, remember they said at least. They didn't say more, only three, managed to obtain the payroll numbers on Wednesday while the rest of Wall Street kept waiting for a half hour government delay. So this is a joke. Like, this should not be available to anyone until they release it publicly. But as you can tell, uh, I don't even care who it is because I'm sure more than three. So, but look at this. They said they listed the three banks or the two banks. Both called the departments and got the number directly. So if I wanted the numbers, I can just call the departments and get them directly. Yeah, right. Yeah, let's try. Yeah, me or you listening, calling. Yeah, let's see if they answer. Yeah, right. So I love this. I don't wonder that people are upset. The whole thing reeks of incompetence. I don't think it's incompetence. I think this is just corruption. They're giving their buddies. They're probably promised cushy jobs after the government. This series of embarrassing mishaps to roil the labor department releases. Yeah, you know, they gotta get it to their friends first so they can trade. So anyway, as you can see, but me and you, we get a tip. Any insider, they throw the book at us. But these people, you know, they're accidentally or on purpose doing insider trading, and nothing happens to them. So anyway, here, oh, of course, they're not. Let's see what Fed. Here it is. I'm not going to pay. Fed Chairman Powell signals time has come for a September rate cut. So as I said, you know, they're going to reverse course. They have to, uh, and I don't think it's going to be one or two cuts. I think they're going to be a lot more. As you can see, gold's doing really well, and gold's outperforming the stock market. So I'm not too big of a believer. I think it's economic data, but it is nice to see. And I do think gold outperforming the stock market is good for gold. I don't think it's the main thing. I think it needs to be a weak economy, but you can tell. So that's all I have to say about that is that, you know, the economy's looking horrible. They're revising everything down. I don't think the job numbers is going to be the first thing. They're going to revise GDP, retail sales, among other economic indicators down in the future. Uh, we're going to start, and not only that, these rate cuts are not going to be out of the woods. As I said previously, it'll probably ignite inflation or other things. So, anyway, that's all I have for today. Hit that like button if you haven't, subscribe, and if you've listened all the way, I appreciate the people who listen all the way. I'll be doing more videos over the weekend. I have to. There was a lot of things I wanted to get into. I wanted to talk about the small mining sector, among others. So more to come this weekend. I had a very busy week, so I couldn't do it. So hit that like button, subscribe, and I will see you next video.